Nobody starts with $1 million. Nobody wakes up on the first day of their wealth-building journey with enough capital to make the numbers look impressive on a spreadsheet. Nobody begins with the kind of balance that makes compound interest feel real, feel significant, feel like it is actually doing something worth paying attention to. Every single person who has ever built genuine, lasting, generational wealth started with a small amount. A first deposit that felt almost embarrassingly modest given the destination they were moving toward. A beginning that looked nothing like the ending. And the most important financial insight you will ever absorb is this: the small amount at the start is not the obstacle. It is the entire point. Today we are breaking down exactly why compounding always starts with a small amount of money, why that small beginning is not a disadvantage to overcome but a feature of the process to embrace, and why the people who understand this truth start immediately while everyone else keeps waiting for the day they have enough to make it feel worth starting. That day, if you are waiting for it, is never coming. And by the end of this you will understand precisely why. Start with what compounding actually is at its most fundamental level, because most people have heard the word without fully internalizing the mechanism. Compounding is the process by which returns generate their own returns. You earn interest on your principal. Then you earn interest on your principal plus the interest you already earned. Then you earn interest on all of that combined. The base keeps growing not just because you are adding to it but because the growth itself becomes part of the base that generates future growth. It is a loop. And like all loops, it becomes more powerful the longer it runs. The reason this always starts small is both mathematical and practical. Mathematically, the early periods of any compounding curve are the flattest. The growth in year 1 looks almost identical to the growth in year 2. The curve does not reveal its true nature until later, sometimes much later, when the base has grown large enough that even modest percentage returns produce numbers that begin to feel significant. Practically, small is where everyone begins because small is what is available at the start of any financial journey. The question is never whether to start small. The question is whether to start at all. Consider the most cited example in all of personal finance because it has been cited so many times for a simple reason: it is true and it is staggering every time you see it laid out clearly. Two people. Same investment vehicle. Same average annual return of 8%. Person A starts at 25 and invests $300 every month until they are 35, then stops completely and never adds another dollar. Person B starts at 35 and invests $300 every month all the way until they are 65, 30 years of consistent contributions versus person A's 10. The psychological barrier that stops most people from starting small is the gap between what the early numbers look like and what they know the destination requires. You want to retire with $1 million. You have $50 to invest this month. The distance between those two figures feels so vast that the $50 feels not just insufficient but almost insulting, like bringing a teaspoon to fill an ocean. So people wait. They wait for the raise, for the debt to clear, for the right moment when the starting amount feels proportional to the goal. What they do not understand while they are waiting is that they are making the most expensive financial decision of their lives. Every month of delay is not a neutral pause. It is a permanent subtraction from the compounding timeline. The curve does not pause while you wait for a better starting amount. It simply starts later, runs shorter, and produces a smaller outcome, not proportionally smaller, but dramatically, disproportionately smaller because of how the mathematics of compounding actually behave over time. The $50 invested today is not competing with the amount you eventually want to have. It is competing with zero. And zero compounds into exactly zero regardless of how long you wait or how perfect the conditions eventually become. There is another dimension to starting small that the mathematics does not capture but that experienced wealth builders consistently identify as one of the most important benefits of the early compounding period. Starting small teaches you. It builds the identity, the habits, and the financial literacy that larger amounts later require you to already have. The person who starts investing $50 a month at 22 is not just building a portfolio. They are learning how markets move. They are learning how their own psychology responds to volatility, whether they panic when values drop or whether they have developed the understanding that downturns are the mechanism through which long-term investors accumulate more units at lower prices. They are building the automatic behavior of consistent contribution so that when income grows and contribution amounts increase, the habit is already established and requires no additional willpower to maintain. The curve belongs to the person who started. Not the person who started with the right amount. Not the person who started when the conditions were ideal. The person who started. Full stop. Every large compounded fortune in history began as a small amount that someone decided was enough to start with. The size of the beginning was never the determining factor. The decision to begin was the determining factor. And that decision is available to you right now regardless of what your current balance looks like or how far the destination feels from where you are standing. Start with what you have. Start today. Let time do the work that no amount of waiting will ever do for you. If this shifted something in the way you think about your money and your timeline, hit subscribe right now, because every single week we go this deep into the wealth building principles, the compounding strategies, and the financial mindset shifts that turn small beginnings into extraordinary outcomes. Share this with someone who is waiting until they have more before they start, because this is exactly what they need to hear today. Drop a comment below telling us what your first investment was or what you are starting with right now. Every beginning counts. Every single one. We will see you in the next one.